Good morning, everyone. I hope you're having a great day, and thank you so much for stopping by to chat about GameStop with me. Another red one on the books, but it is what it is. The further down GameStop goes, the more we can afford to buy, and the better of a deal those buys are. And I didn't expect that we'd ever break down off of this bond gap dilution low, but here we are, right? So there's a lot of market uncertainty uh, currently, and whether or not that's directly related to GameStop is up to conjecture. But thinking to myself a little bit, well, if this isn't the bottom, what is, right? And then if we're using the RSI to time our tops, a lot of the times, we should also be, I guess, using it to time our bottoms. Wouldn't that make sense? Um, the 4-hour PMO on the kitty charts has been, really, really good to us for, those reversal signals so far. So let's see. And this failed the reversal, which we were looking for yesterday. Um, Bummer. So, kind of just watching that a little bit more, see how it unfolds. The RSI, getting into this, 30 territory, which makes for nice entries because if we can, look at RSI and the price here, right? See nice expansion up off that low. We see nice expansion up off this low, right? We see really nice expansion here, but that's a kitty invoke, so that's kind of not great data. This one is a false positive. Like, yes, we do rally off the low, but it bleeds down far more, which is pretty brutal. But we go back a little bit more, rally off the low really nicely, rally off the low really nicely, and again and again and again. So just because it was like a false positive once, there's like 20 other times where it was not, right, and did work out really well for at least a short term run, right? So in this area, you could really start to look at buying, some longer dated in the money calls to start with if you don't know what you're doing. This is going to give you more leverage than the shares, and enough time to have this swing around. Like, this might not be perfect bottom, and things maybe do get worse. But by buying them in the money and long dated, you're allowing yourself risk management because the call's not going to get shredded by 60%. And then you're just like, well, I'm cooked. I'm just going to leave it, right? It'll go down, just a couple percent. And then you can say, oh, wow, the market is actually blowing up. You know, I gotta liquidate this position. You're doing so with a very small loss, right? Risk management, that's important. Anything short dated, out of the money, you're gonna get melted. And those are the kind of the calls you want to be selling people, right? You want to be selling covered calls that are short dated, out of the money, rinse and repeat, and just farm premium, right? But if you're looking to go long, right, they got to be in the money, they got to be long dated until you get the sniper entry model, at which point, you can kind of size in a little bit more, maybe go a little bit out of the money or at the money, and then, a little bit shorter dated, but you still like to give yourself a bit of a runway, right? For price improvement week after week, right? So you can capture the whole run without having to to roll. Because when you do that, you're assuming more risk each time, and we kind of want to avoid that. So, I'm liking 2027 20s, if things turn around and we do get an entry model, which maybe this 4-hour coming back on itself, then we can look at something, 22 to 24 maybe at most, mid 2026, right? At which point we have our 15-minute reversal and our 1-hour reversal all setting and cementing. Maybe we can go in a little bit more time wise. We don't really want to go anywhere else with the strike, right? We barely ever want to play out of the money, like maybe 50 cents or a dollar out of the money. Like, just keep it close, and you'll assume far less risk, specifically as you're building that account, right? Um, and then, yeah, maybe we can bounce this back up, kind of challenge the 50 mark here, and maybe at this point it's a down trend retest on the RSI. But we got a lot of work to do here, and we do have, of course, these other gaps that people are quite interested in. There's like that $17 gap or something here, 20 to 24. So maybe let's put a line here. But again, this is on the 1 day. Typically, we like to use the 4 hour, and then you can kind of avoid stuff like that. Let's just extend this over, right? So, this has got to be the absolute best entry is the, 20.2 here. Let me just see also the consequent encroachment of this gap, right? Because we have our wick here, and then we have our wick here. So this is our consequent encroachment, or our CE, our 50% mark of the gap. And that's going to act like a magnet or an anchor point, which we've already gone through. So this is good discounts. It's, really nice entry anywhere down to 20.26. Like breaking below that, I don't even know where the $17 gap is people keep referencing. Here. Maybe it's just itty bitty, which I should be used to, right? What is this? 1965 to 2110. Okay. Okay. Well, this one already filled though. Well, they've all already filled, to be honest. This is, well, no, that's a 13 to 15 gap. That's not the one they're talking about. There's a lot of people really preaching the $17 gap, and it's like, I don't see it. Maybe someone can show me where it is. Anyway, we're at that level, right? We're at, this area of really good non-confirmation entries, whether you're, dollar cost averaging in on your shares or buying some leaps. I think that's great. Just avoid short-dated, out-of-the-money calls. People are probably selling you those, and when you have a lot of shares, when you're an avid GameStop investor, you collect them, right? And then you need to sell a lot of covered calls because you have so many shares, and there's not always enough buyers, and sometimes you got to stir up some hype for those fills, if you will. So just be aware of that. Always in the money, always long dated, unless you're already on a really good trend, right? Something that's confirmed with like maybe a corporate catalyst, something like this, right? And then my trades or my charting, I don't know what we're looking for really. We've got our sell side liquidity here. I got to eat my own shoe or something. I told a bunch of people this would be the lowest GameStop goes, and well, here we are. So, blatant stop loss hunting as far as I'm concerned. And then we do have that potential level down to 1980 or something. So, some room to the downside. I understand it's painful, but what a fantastic opportunity this is to average in, right? To lower your cost average. I think that's going to be great. On the 15 minutes, we're waiting for that reversal to pair with the key level, which we couldn't get. And we'll get it one day, right? Volume is really low here on the 1 day as well yesterday, right? 5.72, which is good. So when you see, your volume or your price retrace on high volume, that's bad. That indicates a lot of sellers, which is the opposite of strength, right? However, when the price retraces on low volume, not so worrisome as far as I'm concerned. And our unbalanced volume on those kitty charts is still looking pretty decent as well to help support that theory. So, I just wanted to jump in, say hi to you guys. This weekend, we're probably going to talk a little bit more about options, right? Do some options education. Options as a strategic investment is the book you'll want. Go through the definitions, go about long calls, do covered calls, do leaps. Just a few chapters. They're not long, very easy. And you can get a PDF for free online. And, we kind of talk about some of those things here, and we'd like to do more of that this weekend, going through intrinsic versus extrinsic value on your option contracts, right? So have an amazing day. Don't be too hard on yourself because your position's red. It's okay. Ryan's not going anywhere. His position's red too. And, this was like his big buy-in price. So, maybe we see more of that in the future, right? So some insider buying could come of this, right? This discount, as it should for you as well. You can kind of use those buys as an indicator, right? Um, so yeah, just have a great day. Thank you all so much, and I'll see you all a little later.